Okay, I think we're live. Um, Nobody's here, which is to be expected. So Bitcoin's crashing, stocks are crashing big time, and I've been working on all the changes that we're going to be making at Lark Funding, and we're going to be doing a live webinar on November 3rd talking about all the changes. So I figure this is a good chance to practice, not practice, but to make sure that all the software and everything is working for the live stream. But I do want to break down everything that is going on because things are looking nasty. First things first, let's see. Let's maybe share an announcement in the Discord to see. Oh, we actually have, what's this? 3 people. Very cool. I think 3 people are here. Either way, before we get into it, let me share in the Lark Discord a little announcement. I'm live on YouTube. Come say hi, everyone. Okay. Maybe share the link would be helpful. Share, copy. All right, sweet. So this is what we're going to do. We are going to break down the market. We're going to discuss everything that is going on. If you have any questions about the upcoming changes at Lark, drop them in the chat. But my golly, things are not looking good for the market. You could see here, Bitcoin is down 2.68%. We are touching for the first time the 200 EMA and the 200 SMA since I can remember. The last time we touched it was back in April. So I just bought $1,000 worth of Bitcoin. I bought about the same amount yesterday. The way that I always look at it is pretty straightforward. I want to see where we are relative to all-time highs. In order to make money, I don't want to have to make history, right? So even if we just return to all-time highs, long term it's going way higher. But, recent near term, 17%, that's a pretty nice return. Whereas if you go on the S&P, which is also down, it is only a 2.5% return. And I saw on Twitter this insane stat where the current PE ratio of the S&P, I think it's 24 or 22. Don't quote me on it, but over the last 100 years, when you have bought the S&P at the current PE ratio, your annual return over 10 years was between -2 and like 1.5%. So stocks are massively, potentially overvalued. Not everyone will agree with me there, but my goodness, the chat, we have 12 people here. Thanks for joining, guys. My brother in Christ, amen to that. I can't see. I think Matt also crashed. He was visible first. Screen is currently. Can you still see me? Can you see me? Now I can see. Okay. But wait, when I switch over to Trading View, can you not see me right now? Is it going back and forth? Can see now. Yes. Yeah. Yeah, as in, okay, right now I'm looking at Trading View. Can you still see me? Yes, you can see now. Okay. Okay, I think it's working fine. Okay, perfect. Well, it's crazy that you guys are here. Honestly, to be honest, I really like Meet Kevin on YouTube. I don't know if you guys know Meet Kevin. I don't watch all of his content. This guy here goes live all the time breaking down the market. And honestly, just being live is kind of fun. I haven't done it in a few years. And like I said, I am going to do a live webinar on November 3rd when we're making all of the changes at Lark. So honestly, if you guys like this, I'll go live way more often because it's super fun to chat with you guys and to see what's going on in the market. So that's good stuff. I mean, I want to break down what's going on with Bitcoin, with stocks. There's lots of trading opportunities out there. But also, if you guys have questions about what we're doing at Lark, I can't share everything. But you guys are here live. So, maybe I could give you a little sneak peek of what's coming. But anyways, drop your questions in the chat. Let's take a look at what's going on in the market, specifically news related. S&P is down 1%, so that's no good. Bitcoin 2.5%. Gold is absolutely insane. It hit 4,300 for the first time. You guys have to subscribe to Pip Munch. It's completely free. The daily email newsletter. I write it myself. This guy right here. I write it myself. Every day I'm writing it. It's like, oh, gold for the first time hit 4K. Big news. Gold for the first time hit 4,100, 4,200. Today, 4,300. It's absolute insane. And today we had, was it JP Morgan? JP Morgan said that their price estimate is now 5 grand, which is crazy. So it hit 4,300. And the real takeaway here is not that gold's getting more valuable, it's that the dollar is just having the worst year in decades. The dollar is getting destroyed. This is the 1 hour chart. You have to remember these things aren't getting more valuable. What they're being denominated in is getting less valuable. So that's why Bitcoin's been going up. That's why stocks are going up. That's why gold's been going up because what it's denominated in is getting weaker. So you kind of have to keep that in mind. Aussie yen also crashing. Yeah, everything's down. I've been looking at UNH stock, United Health. Warren Buffett bought that recently. VFV, that's the S&P that Canadians buy, down 1%. So the market's not looking great. So let's see what's actually going on here. Regional banks, Jeffrey accuses U.S. of deliberately causing panic over rare earth controls, says it is open to talks. Tariff costs, Retail traders, incredible support of the stock market. Trump says he and Putin will meet in Hungary to discuss war in Ukraine. What's this? This might be, hold on, let's go back to the Dow here. Because the market was looking half decent. Stocks fell Thursday, giving up earlier gains led by declines in bank. Yeah, it's really the bank stocks. I mean, but yesterday JP Morgan had earnings. Hold on. Yeah, they're down 2%. They were looking good though. They had a nice rally up to 309, down 2%. There's also Wells Fargo. The bank stocks, ooh, that's what's causing the crash here. The bank stocks are not looking too hot. The Dow lost 411 points after gaining 170. Regional bank Zion's Western Alliance. Market is just really skittish. Banking industry, just a lot of fear right now. Let's take a look at Finviz, the painful. So into crypto. Fortunate Bitcoin, S&P. It's not looking very good. Appreciate all the messages. Okay, let's see what's going on here. We can see the chart. Yes, we can see you. All right. So 25% gold last month. Yeah. Okay, 228. So that's kind of what's going on there. Which, like I said, I bought $1,000 of Bitcoin today. It's really this 200 SMA though that is major on the daily. If we break this, it could get ugly. If we break this, we're going back down to 100. I don't know if we're going to break it, but you know, interest rates are still so high. The Fed's going to print. They're going to cut rates. It's only a matter of time until the money printer starts going again. So, you know, I think, stocks only go up until they don't. So that's kind of my approach. I've been buying the dip since April and it's worked out pretty well. I actually bought Coinbase all the way back in April. I'm up like 120% on Coinbase. This is always a good stock to watch because it's just crypto leveraged, like it's Bitcoin leveraged. So if you're bullish long term on Bitcoin, Coinbase is going to naturally benefit from that. So, it's up big time. It's coming back to this support area. It was nice when it was at 440, but even 400 right here, but it's dropped a good $70 since. So that's painful. Okay, if you guys want to talk a little bit about Lark. So if I pull up, give me a sec here. If I pull up the email that we sent yesterday, I mean, for you guys taking prop from challenges right now, really good opportunity if you know what you're doing, but it's obviously tough times. Um, Tough times because the market is moving so much. Okay, let's share this tab here. You guys can see this. Okay, so this is the email that we sent out yesterday, talking about the changes that we're going to be making at Lark Funding. So in business for over 3 years now, but really just to be transparent, my goal is to do something different. Okay, being in business for 3 years now, we've really found our footing in terms of just operating the company, providing fast payouts, excellent support. and arguably, objectively, the best challenges. Okay. I'm not saying that to sell them, but if you just look from an objective standpoint, you take FTMO as an example, right? It's 10% phase one, 5% phase two. We're 8% phase one. Um, if you look at right, so we have more max drawdown. The daily loss limit's the same. We're less expensive. And okay, maybe FTMO's not the best example because yeah, you're paying for it, but it's still good rules. A little bit harder to pass. But these other firms that have consistency rules, news restrictions, these 15% consistency rules are just absolute nonsense. Like if you are paying for a prop firm challenge with a 15% consistency rule, dude, like anybody, oh, my laptop's at 10%. We still got time. Anybody who's buying like 100K instant funding account for $500, it's cheap for a reason. It's just nonsense. That's just my opinion, right? Controversial, but it is what it is. So the whole idea with November 3rd is to bring something new, is to bring something different. And we're shifting to traders that are focused on turning trading into a career. When I became a full-time trader in 2020, 2021, right? I wanted to use prop firms to quit my job. I wasn't interested in spending 5 grand. I didn't have 5 grand to spend on prop firm challenges. So I was so focused on just spending money on one challenge, passing, and making enough money to pay all of my bills. And that is the type of trader that I want to work with at Lark. And so we're going to be redesigning the one step program specifically for traders that want to build a career. So we have a handful of features that are coming that nowhere else in the industry you'll find them. But again, prices are going up significantly as a result of that because we're going to be offering a lot more value. So we haven't released what those features are yet because that's coming on the 3rd. But in order to make room for that, we have to remove things first. So number one, discounts are gone. So as of January 1st, 2026, we're killing discounts. To be honest, discounts, you just train customers to want discounts, to wait for discounts. And to be honest, if a prop firm is running a 40% discount, which I mean, we're seeing these insane discounts for Halloween, which is 40, 50, 60%. It's just garbage. If a prop firm is running a 40% discount, they're just telling you that, well, we swindled you if you paid full price, right? We're not worth full price if we can run a 40% discount. It's just, it's annoying. I mean, nobody wins long term. A trader doesn't win long term, and a prop firm doesn't win long term with huge discounts because the trader's going to have their payout denied. It's going to be terrible service, and prop firm's not going to make any money. And so nobody's winning. No, the prop firm can't offer a world class service because they're pinching their pennies. So no more discounts. Next month we'll do a 5% discount, and then 2026 no discounts. If we run a discount, it'll probably be like a value add, not a price drop. And it would be 3 times a year, which would be June 1st, which is our anniversary, Black Friday, and Boxing Day. That's it. And it's going to be so much easier for you. It's going to be so much easier for me. We don't have to say, oh, this month, what kind of discount are we going to run? No, because we're actually going to provide the value of full price. And so you won't have to wait. You won't have to feel gypped of, oh, I bought this month at 10%, but next month it's 20%. I should have waited, right? It puts a bad taste in your mouth. So that's no fun at all. I'm just taking a quick look at the chat here. Done. So well, if you guys subscribe, that's very kind of you. Yeah, consistency rules nonsense. Future, we don't offer futures, but it's consistency rules across the board, not just on futures prop firms. Okay, I'm trying to think here. My laptop's at 7%. We'll keep going. One-step program. So we are leveling up the one-step program, but we're increasing the price significantly. It's not 10%, not 20% increase. It's a significant increase. We will, to be honest, be the most expensive firm in the industry. But again, before you get scared of that, the value that we're going to be adding to the challenges far surpasses what it is that we're going to be introducing on the challenges. So don't get too scared, but really it's going to be a huge value add. The big one is we're removing the two-step. It's ending. Yes, it is bold, but we are removing it because, I mean, should traders have to prove themselves twice? It's up for you. To be honest, a big reason behind it is every firm offers a two-step challenge. If you want a two-step challenge, you can get it everywhere. I'm not interested in competing with these firms that are undercutting